Something just changed in XRP that matters more than it looks. The Bank for International Settlements has highlighted a consensus model with characteristics that's closely aligned with the XRP ledger's approach to settlement finality. And that matters because central banks don't study payment infrastructure without a reason. Today, we'll examine what the BIS actually said, why institutional investors are paying attention, what it could mean for the future of cross-border payments, and just as importantly, what conclusions cannot yet be drawn. For years, the debate around XRP has been dominated by price targets, lawsuits, and speculation. But beneath the headlines, a much bigger story has been unfolding. The world's financial institutions have shifted their attention away from asking whether blockchain technology works and towards identifying which designs can meet the standards required for global financial infrastructure. This is why the BIS paper deserves attention. This isn't about an endorsement of a token price or a declaration that XRP has already won. It's about the qualities institutions prioritize when moving trillions of dollars across borders, certainly of settlement, operational resilience, and interoperability. And when those requirements are compared with existing blockchain architectures, the XRP ledger enters the conversation in a meaningful way. Now, here's where it gets interesting. To understand why this matters, ladies and gentlemen, we first need to understand the role the BIS plays in shaping the future of global finance and why its research often becomes tomorrow's financial infrastructure. See, most people know the Federal Reserve. Many know the European Central Bank, but few understand the role of the Bank of International Settlements. The BIS doesn't set interest rates for consumers. It doesn't manage stock markets. Instead, it acts as a forum where central banks coordinate policy, study financial risks, and develop standards that influence global finance. Write this down. If commercial banks are the storefronts, central banks are the wholesalers. Then the BIS is where many of the blueprints are discussed. That is why institutional investors pay attention whenever the BIS publishes research. Not because every paper becomes policy, but because today's research often becomes tomorrow's financial infrastructure. And that's what makes this latest discussion so interesting. Ladies and gentlemen, if you want the satellite perspective on XRP and crypto and want to cut through the daily chaos and noise, subscribe to the channel. I break it down simply so you can see what actually matters in the markets. Most crypto conversations revolve around speed. How many transactions per second? How low are the fees? How quickly can payments settle? Institutions look at something different. They ask one question: can we absolutely trust the settlement? That is where the concept of finality becomes critical. When an institution settles billions of dollars, it cannot afford uncertainty. If a payment can be reversed, if there's even a small probability that a transaction might be later be reorganized, operational risk increases dramatically. Banks hate uncertainty. Clearinghouses hate uncertainty. Central banks hate uncertainty. What they want is mathematical confidence that once a transaction settles, it is finished. That is exactly why settlement finality has become such an important discussion. Bitcoin pioneered decentralized money. Ethereum pioneered programmable finance. Both changed history, but they were built with different priorities. They rely on probabilistic finality. The deeper a transaction becomes within the blockchain, the less likely it is to ever change. For everyday payments, that may be perfectly acceptable. For institutional securities, settlement, wholesale banking, foreign exchange, and cross-border clearing, the tolerance for uncertainty becomes much smaller. The XRP ledger was designed differently. Its consensus model aims to provide deterministic finality once consumers and consensus is achieved. That design choice has existed for years. Now, this is what most people miss. The discussion isn't about declaring one blockchain universally better than another. Different systems solve different problems. The question is whether the characteristics institutions require align with the characteristics a network already provides. That distinction matters, ladies and gentlemen. Financial history offers an interesting parallel. In the late 19th century, many nations gradually adopted the international gold standard. There wasn't one dramatic day when every country agreed. Instead, Adoption occurred over years as governments recognized the benefits of using common monetary standards for international trade. The standard reduced friction, it increased predictability, and global commerce accelerated. Today's conversation isn't about returning to gold, but it does remind us that financial systems become dramatically more efficient when participants agree on common standards, ladies and gentlemen. Whenever those standards involve precious metals, paper currencies, or digital settlement technology, the principles remain remarkably similar. One of the most closely watched initiatives from the BIS is Project Agora. Its objective is ambitious. Explore how commercial bank money, central bank money, and tokenized financial assets could operate within a more unified settlement framework. This isn't simply about cryptocurrencies, ladies and gentlemen. It's about making global finance more interoperable. Imagine dozens of countries issuing digital currencies, hundreds of stablecoins, thousands of tokenized assets. Without interoperability, liquidity fragments, settlement slows, costs increase. Someone or something must connect those systems efficiently. That is why investors continue watching bridge asset discussions so closely. Not because the answer has already been decided, ladies and gentlemen, no, but because the problem itself is becoming increasingly obvious. See, for years, crypto focused almost entirely on technology. Institutions focus just as much on regulation. A brilliant technology without regulatory clarity often struggles to achieve institutional adoption. Compliance isn't exciting, but it is essential. Ripple has spent years expanding its regulatory footprint across multiple jurisdictions. That doesn't guarantee dominance, but it does position the company differently than many crypto firms that have remained outside traditional financial licensing frameworks. Institutional finance doesn't simply ask, can this technology work? It asks, can we legally use it? That difference separates retail narratives from institutional reality. Think about the railroad boom. People often remember the trains. What actually created economic transformation was the track. Thousands of miles of standardized infrastructure connected cities that had previously operated independently. Businesses flourished because movement became predictable. Digital finance appears to be entering a similar phase. Tokens may attract headlines, but infrastructure creates long-term value. Without interoperable rails, the system cannot scale. One macro trend deserves attention. BlackRock CEO Larry Fink has repeatedly discussed the changing nature of global finance, including the long-term implications of digital assets and tokenizations. Whether or not the US dollar eventually loses influence is an open debate, but the few dispute that financial systems are becoming increasingly multipolar. More cryptocurrencies, more payment systems, more currencies, more digital assets. The complexity increases demand for interoperability. Again, this doesn't automatically point to one solution, but it does explain why policymakers continue studying settlement infrastructure. The problem is real. The race to solve it is accelerating. Here's where emotions often take over, ladies and gentlemen. Whenever XRP is mentioned alongside institutions, price predictions explode across social media. Some forecasts suggest extraordinary valuations. Others dismiss those projections and projects entirely. The reality is more nuanced. Infrastructure adoption and token price are related, but they are not identical. A payment network can become increasingly useful without immediately producing dramatic price appreciation. Likewise, markets can speculate for beyond underlying adoption. Price reacts, systems evolves. Understanding the difference helps investors separate excitement from evidence. Short-term noise, long-term structure. Before SWIFT became the dominant international messaging system, cross-border payments relied on slower, less standardized communication between banks. The creation of common messaging standards dramatically improved efficiency and reduced operational risk. It wasn't glamorous. It wasn't front-page news, but it fundamentally reshaped global banking. Today's digital settlement discussions may represent a similar evolution, not necessarily replacing existing systems overnight, but gradually modernizing the infrastructure underneath them. History often moves through upgrades rather than revolutions. Think back to the early internet. Most people focused on websites. Few appreciated the importance of broadband infrastructure quietly being installed beneath cities. Without the infrastructure, streaming, cloud computing, artificial intelligence, none of today's digital economy would exist. Financial infrastructure may be following a comparable path. People debate cryptocurrencies every day. Meanwhile, institutions are investing billions into the plumbing underneath digital finance. The pipes matter more than the headlines. This is the question everyone wants answered. Could XRP become one of the bridge assets supporting future cross-border settlement? It could. It may not. No institution has announced that XRP will become the exclusive global settlement asset. That distinction is important. However, several observable facts continue attracting institutional attention. The XRP ledger was built with settlement efficiency in mind. Its consensus mechanism emphasizes deterministic finality. Ripple continues expanding regulatory relationships globally. Tokenization continues accelerating. Stablecoins continue expanding. Central banks continue researching digital currencies. Those trends exist independently of market sentiment, and together, they create an environment where interoperability becomes increasingly valuable. Rather than focusing only on price charts, ladies and gentlemen, watch infrastructure, watch regulation, watch licensing, watch settlement pilots, watch tokenization projects, watch central bank experimentation. Those developments often move slowly, then suddenly appear obvious in hindsight. Institutional adoption rarely arrives all at once. It progresses, one partnership, one regulatory approval, one pilot program, one standards document at a time. By the time headlines declare revolution, most of the construction has already finished. See, whether XRP ultimately becomes a foundational layer of global finance remains uncertain. Markets are competitive, technology evolves, regulatory changes. But one thing is becoming increasingly difficult to ignore. The conversation itself has changed. 5 years ago, large institutions rarely discussed blockchain settlement in serious policy papers. Today, they do. 5 years ago, tokenization remained largely theoretical. Today, some of the world's largest financial institutions are actively building tokenized products. 5 years ago, central bank digital currencies seemed experimental. Today, dozens of countries continue researching or piloting with them. That doesn't guarantee any specific winner, but it confirms something much larger. The financial system is modernizing. And whenever infrastructure changes, opportunities emerge for the technologies capable of solving real-world problems. For XRP holders, the key isn't blind optimism. It's watching evidence, watching regulation, watching adoption, watching settlement infrastructure develop one piece at a time. Because in finance, the biggest transformations usually happen quietly, not when everyone is looking, but when only a handful of people recognize what is being built beneath the surface. That's why I pay attention to what's quiet, ladies and gentlemen. That trend continues. Today's technical discussions could eventually be remembered as some of the earliest cues that a new era of global settlement was already underway. Whether XRP ultimately occupies a central role in that future remains to be seen, but the convergence of institutional research, regulatory progress, tokenization, and cross-border payment innovation makes it a study-worthy following closely. Remember this, price is reacting, the system's evolving, and in the long run, infrastructure has often mattered far more than speculation. If you've enjoyed this breakdown, subscribe for more institutional-grade macro and crypto analysis. Let me know your thoughts in the comments. Do you believe the future of global finance will rely on a neutral bridge asset? Or do you think another model will emerge? I look forward to reading your perspective, and I'll see you in the next video. Hope everyone's having a happy Monday, ladies and gentlemen. I want to welcome all the new members of the Patreon, the Crypto Public Desk Monthly, all the new members of the membership channel. Today's news shouldn't surprise everyone. We've been positioning, waiting for this to happen again. I've been saying this in multiple videos. Prices are down. Looks like war footing is back. You got reports of Houthi missiles launched on Saudi Arabia. Oil extends gains near month's high. You have the blockade going back in full force. You have a Fed Waller saying that rate hikes may be needed to go higher. You have so much happening right now that it transitions back and forth. I say this over and over again, ladies and gentlemen. One tip from the pit can pay for your entire year subscription. If you want to take the deeper macro research that I talk about here and put it to play, come and join the Crypto Public Desk Monthly and join over 600 active traders and investors who are taking their destinies in their own hand and learning how to take advantage of all the chaos. I think what's happening right now is something unbelievable. At some point, people have to detach from what's happening. If you're new here, do subscribe to the channel, because the second parts of the video is where you get the candy of the Italian ice. You got oil prices climbing. You got crypto taking on the chin. You got a lot of things happening right now, changing everything. Being able to take advantage of this is one thing. Understanding why this has happened is a completely different thing. You got oil surges to monthly highs. This is a completely different ballgame now. The MOU was ripped up. The U.S. blockade is now the entire Iranian coastline. Ladies and gentlemen, with the Houthis attacking Saudi Arabia, they're looking at other pipelines. They're trying to cause financial chaos. That's what that is. If you understand how this is going to play out, fortunes are going to be made here right now, ladies and gentlemen. I can't, in good faith, say one way or another how this plays out. I just look for price movements. And when we find price movements, we take it down. And again, you can see the argument between the old and the new guard, right? With Waller saying rate hikes may be needed if core inflation stays higher, when Walsh was saying they're not going to telegraph anything. That's a direct contradiction and contradiction of everything here right now. Death by 1,000 tweets. I keep telling you this, tweets, market moves. When the markets get to one edge, take advantage of that. None of this is financial advice, just my own opinion. I retain this any capacity. You have to understand something, ladies and gentlemen. I say this over and over again. Most investors, they waste time consuming information. Very few people spend their time analyzing information. If you're here, you're analyzing what I say. See, that difference determines performance. It's understanding where institutional capital is flowing. That's why I tell you, you have to watch the people making their quarterly, monthly numbers. See, this provides insight into professional investors, okay? That's what we believe matters over the next several quarters, not just the next few days. See, when you focus on positioning and flows and probabilities and structural themes instead of headlines, you stop reacting to markets and start understanding them. And in investing, ladies and gentlemen, understanding almost always arrives before opportunity becomes obvious. See, understanding these shifts before they become consensus, that dramatically improves portfolio construction, ladies and gentlemen, risk management, and long-term capital allocation decisions. It's investors who consistently outperform are rarely the ones reacting to headlines. They're usually the ones identifying structural trends while everyone else is still debating short-term noise. It's the truth. People who understand these dynamics before the crowd usually don't need to chase opportunities because they're already positioned when everyone else finally notices, ladies and gentlemen. And it's the one who positioned early, not randomly, but intentionally, get ahead. That's why if you've been listening to the channel here, I've been telling you the last videos that we've been positioning for a return of hostilities for a while. That's what's going to happen. How it affects the markets. If you want to see how this is going to affect oil, affect gold, silver, everything, come and join the Crypto Public Desk Monthly, ladies and gentlemen. If you want to learn how to trade, you want to learn how to invest, if you want to see and capitalize off of the chaos that's coming from this, just like been happening this entire year, come and join the Crypto Public Desk Monthly, ladies and gentlemen, and join over 600 active traders and investors who are taking advantage of this. Look, you see the tug of war between the new and the old guard. You see this. See it happening. As long as this chaos is here, risk assets will be depressed. The dollar will be stronger. That's what it is. All of this, in my opinion, is coordinated. None of this is financial advice. It's my own opinion. Anyone retains any capacity. Because in the time of recording this right now, you got crude oil at $78. You have gold just below 4,000, silver below 58, XRP going down, ICP going down, HBAR going down. That's because there's risk off. This setup, now that hostilities have returned, is going to provide some of the most lucrative trading setups right now for people who are going to take advantage of them. And believe me, we're going to be taking advantage inside of the Crypto Public Desk Monthly. But ask yourself this question. Do you believe all this, or is this just noise? I try to take the PhD out of PhD for everybody here, but understand something right now. Things are changing. They're changing every day. It's whether or not you want to change with them. Being the remora, we don't get caught up like sushi, ladies and gentlemen. We take advantage of this chaos as financial mercenaries. When conditions like this come about, it makes our job a lot easier to find alpha. It does, because it takes us from just the equity side of this into the commodity plays, and it allows us to accumulate in scarcity and in value of where we're going, ladies and gentlemen. I think that the chaos is going to be here for a minute. And I think that after the midterms are here, we will look back at this time period as nothing more than turbulence on a plane ride to a family vacation. This is, as far as we're concerned, and none of this is financial advice, just my opinion, retains any capacity. This is, we think, the final drawdown before things change. That's what I think, because the drawdowns are being produced by geopolitical, geoeconomic situations. Some of them can be choreographed, some of them from tweets, some of them from just outright chaos. But they all point to something, a changing narrative. XRP is the future. Ladies and gentlemen, ICP is the future. You can sit here and argue about this all you want. People either understand what's coming or they're not paying attention. I always tell you to pay attention to what's quiet, because that's what's most important. It truly, truly is. I would be able, I was saying this on the phone to a large client. Customer because they buy copious amounts of metal, and client because we manage for them. If I could go back and tell myself when XRP first came out to see the science behind it in the same way that I look at the science behind refinery, solvent extraction, electrowinding, because I love the earth, I would do that, because the science says something that is so undeniably true when you look at it, where we're going and why. It's having the patience to not get chopped up like sushi, to not use leverage, use common sense, get that Gucci conviction, that Gucci clarity, understand this, because these prices are not going to last forever. XRP is the answer to a lot of problems, ladies and gentlemen. I don't look at daily price charts. I don't do that. I look at the utility of it. That's why I say XRP is like oil. I've always said that here, ladies and gentlemen, because it's the future of everything. But with chaos coming here right now, expect to see plays with WTI, all the metals, everything. Love and copper. Copper is going to be spectacular, but we're going to take advantage of all of these intraday moves, intra-week moves, to be able to acquire more crypto before these price points are gone. Ladies and gentlemen, this is not financial advice. This content is for educational, informational purposes only. Always consult the licensed financial advisor before making investment decisions. Never invest money based on watching a YouTube video. Don't ever do that, ladies and gentlemen. But to me, I find it unbelievable that people are surprised that this is happening. If you're new here, go back the last few videos and you get to the second half and you can hear me say that we're positioning for return of hostilities. We're positioning for return of hostilities. And we are now at the return of hostilities. And it's going to be broader based with the Houthis getting involved and a lot of other things getting involved. But we, as financial mercenaries, take advantage of everything that is given to us. It makes our day-to-day job easier, ladies and gentlemen. You have all the big boys talking about change, the BIS, DTCC. I don't know how many other players you need to talk about or hear about that are talking about big change. I love you all, ladies and gentlemen. I'll see you on the front lines.